That is definitely a two-legged pullback. Gold might actually see a run up back into this range right here. But we'll definitely talk about that later on. Okay. All right. All right, so let's get started. Let's get started. Let's get started. What's up, everybody? Hopefully, everybody was green today. The Bulls were definitely regarded today. They didn't let the market really rotate down lower at all. So anybody that stayed short definitely found themselves in a world of pain, wishing that they actually got out of their position. I did not top back into the market, even though I did see some potential positions that I could have taken. I just didn't want to deal with it. So I'm just going to come back in tomorrow. But we're definitely done with today. We had no major news, and the market traded as such. Okay, so we definitely have a lot this week. We definitely have a lot. This week is definitely going to be a volatile week. Uh, let's just do it one day at a time. All right, just one day at a time. All right. So we definitely have a volatile week this week. As you can see, let's actually just go over it again real quick, and then we'll just focus on tomorrow. So we have a lot this week. We have Fed Chair Powell speaking this week. We have him speaking Tuesday and Wednesday. It's going to be Tuesday that's going to have the most impact. Usually the Wednesday meeting is just him repeating what he states in the first meeting. So we shouldn't see a lot of volatility on the Wednesday testimony, but it is Powell and the market is going to react if he says something that's not expected of him to say. So just be mindful of that. We also got CPI on Thursday, which is interesting. We have CPI, but it doesn't look like, and we have jobless claims as well, as we do every Thursday. And we have PPI on Friday. We know that PPI is usually the bigger news event. The economy cares more about the consumer, not necessarily the producer. So once we get that rating from CPI, PPI shouldn't be that big of a market mover. It will move the market, but it will not move it as much as the CPI will move the market on Friday. So let's just focus on what we should be looking out for tomorrow. So obviously at 9 o'clock, this is going to be big. I would recommend starting a position in this. And even if you're well positioned into something, I would consider taking profits as we get closer to that 9 o'clock hour, because the market is capable of moving back and forth up to 50 to 100 points on the Nasdaq and a couple of points on the ES. So I would be looking to take profits as we get closer to this time frame. We have the 52-week and the 3-year note auction at 10:30 and 12 o'clock. We do have a Fed speaker at 12:30. I highly doubt that will make any impact to the market, especially after we hear what Jerome Powell has to say. Any Fed speaker after him is almost a non-event, because what they say would either back up what Jerome Powell is saying, and if they say something different, the market is not going to react because we care what Powell says. And we have some crude news at 3:30, so we only have Powell to worry about tomorrow. So that said, let's jump into the charts. And I did just see this in the market. I did see that the Nasdaq had this massive, massive move up into this area, which honestly we could see a retracement from here. You can see that we did trade through this golden zone, and you can see that we had a stop run up, and it does appear that the market is coming back into this area. It's still the pre-market. At this point with the Nasdaq, you would just have to really pay attention to the price action. It keeps making new highs, so that's just going to be a thing with the Nasdaq for a while. Price could be trying to trade up into this golden zone, this 740 to 743 area, and we could possibly see a rejection at 752. Yeah, 752. We could possibly see a rejection here in this golden area. We've had a massive move up. And if you just look at the price action, you can see that price broke out of this range. This big range that price was trading in this afternoon, we saw a breakout from this range. So the question is, will the market continue to grind up, or will the market pull back somewhere in the 600, the 650 to 655 area, somewhere here where we saw this consolidation from 65 to 55, somewhere in here? And will the bulls are they willing to defend this area and use this as a launch pad to create all new all-time highs? We do have Pump It Powell tomorrow at 9. So I do expect for the market to pump after he gets done with the more important parts of his testimony. I do expect that. And if his testimony is similar to past testimonies, he's going to be talking about markets. They're going to ask him questions about the economy. And I'm pretty sure if he's going to continue to give his generic answers. So that's something to look out for with the Nasdaq. Now, if price does come back into this range right here, actually, let me see if I can get a clean chart. I can take this off so we can see the price action more clearly. Okay. Okay. So if price does come back into this range right here, and the bulls fail to actually protect this area right here, the neckline of this breakout, we can definitely see price come in, trade through this range, and we can possibly see the market crash, which in today's environment is highly unlikely. Highly unlikely. But this is just a scenario just in case the bulls fail to protect this neckline. Because if they do, all these stops that's underneath, all the stops that's underneath this structure will be used as fuel to push this market down. Give me a second. Freaking kid. Okay. So my daughter was actually crying about something serious, but okay. So all right, so we can definitely use the stops that's underneath this area as fuel to possibly get a retest of this 580 area. Now, let's just say that if that does happen tomorrow, let's just say that the market does find its way back into this area where the market was bouncing off of from pre-market And from pre-market, price hasn't come back and retested this area. So far, the market has bounced off of this level once, two, three, 4, 5, 6, 7, 8, 9. And I guess you can count that as 10. It's close enough. You can count that as 10. So we have a lot of stops underneath this area right here. About 10 layers of stops underneath this neckline. And I'm going to make the assumption that the market is going to want to eventually tap into this area before making a move to the upside. So if the bulls do fail to protect this area as price comes back in, I do expect for price to tap into this liquidity pool, use it as fuel, and we can get a stop down. Now, if we look at the higher time frame, I can get an idea of where the market could go if we do see a break of that 580 level right here. The next area would be here at 535, right here at this value area low would be my assumption where the bulls could possibly come back in. And we can see that move down to 535 if we get a break under 580. And if 530 doesn't hold, the next real level of support is all the way down here around 434, 435, which, like I said, it's almost highly unlikely for the bulls to get this much momentum down because of how bullish the market has been. I mean, look at this trend to the upside. That's a lot of bullishness. And from this bullishness, I'm pretty sure as price would go down, there's going to be buyers at every level trying to buy this up. So it's going to definitely need major news in order for the market to see a sell-off that will get the market trading underneath this low right here. But it's also at the same time, it's hard to imagine price to continue to trade to the upside with no significant pullback. So that's what makes trading in the market today challenging. If we wait patiently and wait for the market to set itself up, we can take decent trades. However, the challenge obviously is waiting for those setups to present itself, because as we continue to go up higher, if you look to the left, we continue to trade into uncharted territory, literally. I mean, there's no price action above 670. There's no price action to the left above this level. So I find it hard to believe, with no reference point, that the market will continue to trade to the upside without creating a little bit of price action as reference in the future. But for right now, price is definitely still trading, and it found its way back into this trend channel that I drew last week. And if the market is going to trade to the top of this trend channel, we can possibly see 780. We can possibly see this. And if we do get a rejection here at this level, this high right here would definitely be an area, or somewhere in this area would definitely be a good area to look for a long, especially with this big, massive breakout candle here. So we're definitely going to have to wait for more price action on this one before we make any trading decisions on the Nasdaq. And you can see and this is the golden fibs from Friday. And everything is lining up. And the price does get up to 780. Let's see. I guess that is a 23% fib. A good risk reward trade would be taking a trade at 680 and having your stop underneath 672. Yeah, a couple of points underneath this candle. I guess 665, underneath 665. So at 680 with a 15-point stop, I think that's 15 to 18 points stop. Would definitely be a great risk reward trade on this. A great risk reward trade. But anything underneath that, I mean, honestly, anything underneath this candle would invalidate this trade going long. That means that the bulls don't want to buy here anymore, that they want lower prices. And it does look like that 655 level has been very attractive to bulls. Yeah. Yeah, we're definitely going to have to wait to see what happens with price overnight with this one, because they definitely did some trading before the session ended, and then we had this big massive stop run to the upside. So, and the bears can never win for some reason. Never win. All right, so with that said, let's jump into this ES chart. Now, the ES is definitely different. The ES is definitely different. Now, price has made it back into the area where we saw this massive move to the downside. A good risk reward trade on this one would be either getting in here at this high, or maybe 2 points above it, possibly around 38 to 39, and having a 3-point stop above that entry on the ES. Because realistically, when the ES usually comes back up and it tests an area where it rejected from previously, usually we get a small stock run higher, and then that's when we see price actually come back down, back into a previous range. And in this case, from what I see, this is the range that the ES is currently using. So we can see price come back into this range. And from here, either the market can make a move back to the upside, which honestly is more likely, or the bulls can fail and we can see a retest of this level. And now, if you joined us in today's stream, we actually talked about this 615 level as a potential area for the bulls to come back in, where we can see a move to the upside. And if you've taken this trade, This one was, I think it bounced at 17. This one was like, I think what, 15 and a quarter, I think, or not a quarter, in 3/4. And you saw this massive 20-point move to the upside. So I did see this as a trade opportunity when I looked at the charts. However, because I was busy, I did not take this trade. And unfortunately, when I saw that this trade worked out after I looked at it, I just walked away from the charts for the rest of the day because I wanted to take this trade with the ES. However, I was too busy to monitor it, and I just didn't have the time to actually do it. So it's unfortunate that I missed this trade. But I do want to say that right now, we do have a somewhat of a head and shoulders pattern. You have your left shoulder, your right shoulder, and your head. And from the right shoulder, we've seen this massive move up. So we can definitely see the market make an attempt to try to trade higher. But I really want to see if the bulls are going to fail here and the bears are going to take over, and we're going to see that move down. And if we look at the higher time frame chart, you can see this massive bullish candle. And that kind of gives me a clue that this actually might really just plow through this level. And we might see a move higher, just like on the Nasdaq. Price coming back here, and we could see potentially more upside on the ES. Yeah, and all the EMAs are definitely pointing to the upside. You got all the EMAs pointing up to the upside. So I don't think there's going to be anybody selling out of their positions anytime soon. And if they do sell out of their positions, there's going to be a lot of buyers willing to buy this thing as it tries to fall. As you can see that it did once we got into this area of support. And yeah, you can see it on the hourly chart as well. Man, this price action is definitely challenging because you had to be aggressive with all your positions. You have to be aggressive with your longs, and you have to be quick to close your shorts once it gets to an area because these bulls are not playing. So on both sides of the market, obviously the bulls, you can get in kind of anywhere with the bulls and be profitable. But at the same time, when the market does pull back, we get these flash crashes because the bulls are just not allowing proper price action to happen. The market is just going up, 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 flash crash, buy, flash crash. So you just have to kind of be mindful about where you're buying at as well as where you're selling at. And it's getting to the point to where it's just, if you see a bearish setup, it's just easier to allow the bears to struggle, get in when the bears are getting out, so you can get a clean move to the upside where you're not in a position for multiple hours like the bears are, versus the bulls where in 20 minutes they're up 30 to 50 points. So it's getting to the point where it's just better being on the bullish, just taking bullish plays. And the same thing, just like with the ES. This is the hourly chart, and they've just been buying for 1, 2, 3, 4. For 4 hours in a row, they've just been buying. The bulls have just been buying the market up. So And you can see that with the ES, we just got to break it at high. So now, if the bulls are going to want to continue to push price higher, bulls needs to continue. They need to come back up and retest this high. And from here, either the market is going to go down or it's going to go up. Okay. That's all we got for the ES so far. This crazy price action. Let's look at gold. And this will be the last thing that I talk about. So the way that gold is looking, it does look like it's found support in the previous session. You can see that price did bounce that support. And before the session closed, we did have a pop. We had a retest of this support area. And from this area, we had a gap up in the new session. And right now, price is continuing higher. I believe that we can see price go to at least this neckline right here. And if the bears come in, I believe that they're going to try to come back into this. Let me see what this is. That 360 area. That 360 area. Because it looks like this is the left shoulder, the head, the right shoulder. And it does look like this is the neckline right here because that's where they bounced it at. So 361 to 360 will be a good area, a good risk reward trade to try for a long if we get a move back down to retest this area with your stop right here underneath this low around 238, maybe 237. Make it 237 just in case. But if it goes underneath this low right here, then we can possibly see a move to the downside. But if they're going to try to protect this low, then having your stop underneath this low would be a great risk reward trade. Having a retest, trading higher. Now, we all know that Powell is going to speak tomorrow. And gold usually pumps before Powell and then dumps after Powell. I have noticed that trend with gold. And I wouldn't be surprised if gold does the same thing before tomorrow morning. I wouldn't be surprised if we get a pump in gold in pre-market. I really wouldn't be surprised. And then after we get that pump, we can definitely see the market try to test this 2380 area to 2381. So somewhere in this range right here is where I expect the bears to come back in and try to dump the market in this area. That's what I expect. And if they don't stop right here, I think this will kind of be too high. But I'll be looking for this breaker structure here at 2390 or this breaker structure at 2386. So somewhere in this area, I do expect for the bears to try to come back in and try to knock price down. They may.
Order filled.
They may be able to knock it down to around this 2372 area once we get a break. And from here is where I expect if they're going to push it back up or if they're going to push it back down. So as a recap of this, if I want to get in long, I want to get in long around 2360. If we're lucky enough to get a pullback, I want to get in at 2360 for a long. For a short position, I would feel more comfortable taking a 380 short. And if that fails, a 2390 short. I believe shorting from either one of these areas will be good risk reward on gold. But obviously, we need to see more price action. And as I've stated before, you don't have to blindly get into a commodity trade. Commodities don't really V-bottom. You can look to the left, and it's going to create a pattern. And once you see the price action to the left, you see where we had a break of structure here, and price came back and tested this area, and we got this move down. All we need to do is see a structure form just like this, and it will form. You don't have to blindly get into a gold trade. You just got to identify an area where you want to trade and just wait for the price action to show you that the bulls are exhausting. And once they get exhausted, that's when you can take your shorts if that's what you want to do. Or as we saw right here, where when the bears took their profits and they tried to short and they got exhausted, you can see that their stocks got used to now make this move higher. So gold does the same thing. CL does the same thing. You don't have to try to chase gold with your positions. All right. Okay, so that's all I have. We will definitely come back tomorrow morning at 8:30. We do have power at 9. So if you're not well positioned into something, I would suggest sitting on your hands. If you are well positioned, I would suggest protecting your position. And with that said, peace out.